Good morning and welcome to the ADS Securities Markets Update. Beginning with the main story again from China. As we noted in our previous reports and many TV stations a few days ago, the People's Bank of China has finally intervened. However, the intervention is surprising. The bank cuts the yuan daily fixing rate by a record of 1.9%, and this intervention is a result of two factors. The first factor is basically declining trade balance surplus, including declining exports and declining imports. At the same time, the second factor is the IMF delays its decision to endorse the Chinese yuan as a reserve currency. Regardless, the move is a good news for China at the same time. Exports will be more affordable in the next few months, and also the imports to China will be more expensive, and this should be supporting the Chinese growth figures. At the same time, also it will might hurt the Chinese consumers by making imported goods more expensive. Earlier this morning also, the Chinese figures shows also today more reasons why the People's Bank of China intervened yesterday. The industrial production slowed down further towards 6%, which remained near the lowest level since the crisis in 2008-2009. The fixed asset investment also slowed more than expected toward 11.2%, which is also the lowest since Q4 of 2000. Finally, the retail sales eased back to the lowest in almost 2 months. The People's Bank of China decision might have come also at the worst time for the Federal Reserve. This is especially the case because the Fed has been promising the market to raise rates, whether in September or in December. However, raising rates in the US would make the dollar even stronger, but the dollar at the same time, or for the time being, is already strong, and it would increase the chances for a slower growth and will drag more drag on inflation. If the Federal Reserve decided to raise rates in September or December by only 25 basis points, it will put the US also in even more difficult and competitive position for export for the US for exporting their goods. Looking at the US figures yesterday also, they showed mixed outcome but mostly negative outcomes. The Unit Labor Cost Index slowed down to 0.5% in Q2 of this year, and this is better than the estimated 0%. However, the Q1 figures has been revised sharply lower toward 2.3% instead of 6.7%. The wholesale inventories also increased further, reaching a recessionary levels at 0.9% in June compared to 0.6% in May. Moreover, the wholesale trade disappoint, which basically here that we would like to say again that rising inventories doesn't mean rising trade. Basically, the wholesale trade rose by 0.1% only, while it had been anticipated to rise by at least of 0.5%. Moreover, the previous figure was revised lower to 0.3% instead of 0.2%, instead of 0.3%. The good news came in from the non-farm productivity data, which increased by 1.3% in Q2, while it had been anticipated or expected to rise by 1.6%, and the previous reading was also revised to a decline of -1.3% instead of a decline of 3.1%. After China's decision to devalue the yuan and the release of the US figures yesterday, the probabilities for September's and December rate hike have fallen again significantly. September's rate hike probability, according to Bloomberg, declined to 44% now, down from 58% on Friday, and December's probability basically fell to 70.8%, down from 88%. The bond market is also not pricing in any rate hike from the Federal Reserve anytime soon. The US 10-year yield declined sharply since yesterday until today this morning, from 2.24% toward 2.07%. And so far, as long as the bond market continues not to price in any rate hike, we maintain our neutral outlook for September's rate hike while we wait for further evidences. Today, finally, we wait for the UK jobs report. Only this is the most significant number throughout the day, and we brace for better readings. The average wages also remains the key today. A surprise increase with more than 3.2% should increase the chances for the BOE or for rate hike by the BOE in 2016 sooner than later, might be in Q2 or Q1. Thus, the GBP may continue, or the British pound may continue to rise across the board, while we still favoring longs against or toward sterling dollar, in addition to sterling yen, and finally sterling CAD. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching. I'll see you once again tomorrow.